The information learned throughout the CFA program can be very beneficial to a career in wealth management. But there is so much content in the program that no one person will ever have to use all of it. The day-to-day responsibilities of a person who works in wealth management can be drastically different depending on the structure of the firm in which they work. And based on those daily responsibilities, you will utilize different pieces of information from the CFA material. In this video, we're going to look at how the CFA charter can apply to various different types of wealth management careers. If you are either a CFA candidate or a CFA charter holder, make sure you hit the like button on this video because that will guarantee your ability to provide superior returns. And subscribe to the channel to keep up on how to provide guaranteed superior returns in the future. Or just like it for my dog here. Okay, go. The term wealth management can mean a lot of different things, all the way down from like retail insurance sales in some cases, up to what some people would consider to be kind of the upper echelon of the finance industry and private equity or hedge funds. Obviously, those types of firms cover many different subsectors within the broader finance industry. Companies in those sectors are just going to do different things, and the day-to-day responsibilities would be drastically different. But the common theme across the entire sector is that you'll either be helping people or supporting people who help people make decisions around their money. Of course, the CFA is an academic program focused on educating individuals on analyzing different investments and, in many cases, making investment recommendations. And those general principles are going to be beneficial to almost every subsector in this industry. We'll start off by talking about the role of Paraplanner. The title Paraplanner typically describes someone who is supporting financial advisors in retail financial planning offices or supporting financial advisors working in private wealth management, maybe through a wirehouse or in an RIA. One of the primary responsibilities of someone with the title Paraplanner is going to be focused around financial planning. Sure, you may do some meeting prep, you may do some meeting notes, you might be placing trades in a client's portfolio after a meeting with their advisor, but largely you'll be working within a financial planning software or writing out financial plans. The CFA program can be very beneficial to all of those activities. It doesn't teach you any logistics on like reading or writing or typing, but studying for as much as passing the exams requires will certainly make you better at those things. There's a ton of material on trading, portfolio rebalancing. Very importantly, there's information on the ethics of rebalancing portfolios across multiple client accounts and how that should be handled. But maybe the biggest relevant factor there would be with the level 3 CFA exam when we get into personal planning and wealth management. The content taught within the portfolio management section, especially on the level 3 CFA exam, is only going to be helpful to a paraplanner when they're trying to write the best or most accurate financial plans or portfolio summaries that they can. All of the statistical metrics, all of the best practices in portfolio management can really shine through when someone's writing up a summary of how a portfolio is rebalanced or some recommended actions that a client takes, and a paraplanner can benefit from all of that. For this next one, we're going to be sticking in the same subsector of the wealth management industry and talking about retail financial planning or private wealth management and financial advising. In a lot of cases, those two positions are going to overlap and be the same thing, but I just want to be clear about the area of finance that we're talking about. Many of you know this is the one that I do in my 9 to 5. I'm a retail financial advisor, so that means this is the best one. Since we're staying in the same subsector of wealth management, the same content from the CFA program is going to most apply to this career, and that's the portfolio management stuff from level 3. If you're a charter holder or level 3 candidate, you're probably well aware at this point that portfolio management technically makes up more than half of the level 3 exam, making that test very applicable to people working in retail wealth management. As a client-facing financial advisor, one of the most important skills is to be a friendly and effective communicator, but of course you're going to have to be knowledgeable in financial planning strategies, some of what are covered in the CFA exams, and also portfolio management strategies, many of which are covered throughout the CFA program. Let's put it this way. It would be extremely difficult to convince me, or what in my opinion would be any other well-educated financial advisors, that there is an academic program out there which can better prepare a financial advisor to manage client portfolios than the CFA program can. There's not much debate that the CFA is the gold standard in the finance industry, and again, with so much of level 3 covering portfolio management, all of that stuff is going to be very applicable to working with clients as a financial advisor, especially if you're in a situation working on an investment committee where you will work on the firm's model portfolios that get applied to many clients' accounts like I do. In addition to all of the statistical training that you'll get on the data behind portfolio construction, there's also a lot of information through the Level 3 program on manager selection that will benefit you a lot as a client-facing financial advisor. You also learn a lot about alternative investment strategies like futures, private equity, and hedge funds. And if you have clients who want to invest in those types of things, again, there's almost no better formal training an advisor can get than going through Level 3 of the CFA exams. Finally, the potentially most beneficial part of the entire CFA program to a financial advisor is the behavioral finance content. In many cases, being a financial advisor does not involve rocket science. So if you're getting your client to make smart financial decisions and do the little things right, you're likely going to be setting them up for success and future financial freedom. So that means keeping your clients on track is the most important factor, far more important than you picking a fund that earns another 25 basis points in a certain year than a different fund may have. Unfortunately, keeping some clients on track and keeping them following their financial plans is the most difficult part of the job. Look, they're going to be easy clients, but they're going to be hard clients too. So having the psychological background and taking an active approach in thinking about what types of cognitive biases a certain client or clients could be suffering from that's preventing them from making smart financial decisions can really help you diagnose what they're thinking. And then the CFA content literally prescribes you the best steps to take to help the clients understand why they need to overcome a certain way of thinking and then instead make smart financial decisions and follow their financial plan. To put it another way, it would be very difficult for an advisor to ruin a client's financial outlook based on an investment selection, but it's very easy for a client to ruin their own financial outlook based on poor financial decisions. Trust me, behavioral finance is a huge one in wealth management, so it's a very beneficial aspect of the CFA exams. Now let's talk about someone who is a security analyst, maybe investment analyst, or portfolio analyst through a business structure, maybe like a trust company, maybe a high net worth private wealth management group, or a few other firms that would be classified as asset management. Someone who is spending the majority of their day doing in-depth investment analysis is likely going to get the biggest benefit from partaking in the CFA program. With as much information as there is about equity valuations, fixed income valuations, economics, corporate finance, all those types of things, if you're an equity analyst or a bond analyst, it's going to be pretty applicable. I might point to level 2 as being the best level in terms of educating you for the day-to-day activities you'll be doing, but really all 3 levels are going to be great in building a diverse financial knowledge base. Just today, I read a report from an analyst who, like 20 years ago, was looking at a cable company, and they literally mapped out a chart of the entire United States for each node that this cable company owned to try to figure out how many households they could potentially provide service to in like 5 or 10 years in the future. Now, the CFA program doesn't educate you on exactly how to do that, but the point is that the decision to complete a project like that took some serious understanding of the company's growth prospects, which is information that could be covered in corporate finance, the macroeconomics of a growing population in the United States at that time, which is covered in the economic section, and then ultimately assigning a valuation to that company based on the expected future cash flows, all of which is covered in the equity section. That's just one example, and there are hundreds of types of projects that an investment analyst could undergo where they're going to be benefited by having the background knowledge of many different sections that the CFA exams cover. Finally, we can talk about sales or marketing positions, and I sort of alluded to these at the beginning of the video when I mentioned retail life insurance sales. Now, the CFA exams don't include content on how to be a better salesperson, but I will tell you firsthand as someone who works in a selling capacity sometimes and also works with people who are selling to me in the form of financial products. Just personally, I'm far more likely to pay much more attention to and assign a greater weight to the information coming from a salesperson if they're really educated. If you can tell that they know what they're talking about, they understand the market that their product fits in, and obviously they need to be honest about giving you the pros and cons of that product and things like that, but a background education definitely improves on the abilities of a salesperson who has all of the communication skills needed for the job. It can be really important too to have the background chops on what they're selling. I know a handful of sales reps for hedge funds or mutual funds that will pursue the CFA program just so that they can have the most knowledge when they're providing this this in-depth analysis to financial advisors like myself or other asset allocators out there when they're choosing where to put clients' money, because they understand that being able to give the best information when discussing their product and the industry in which they operate, comparing their product to competition, they understand that that background is very beneficial during the selling process. Now, the one topic that is applied in the same way across all 3 levels of the CFA program is also another one that I think is very beneficial to every single subsector in the wealth management industry, and that is ethics. It might sound funny because ethics is the only section in the CFA exam which doesn't include any math or numbers, but you might be surprised at how often ethical considerations will come into play in not just every area of wealth management, but probably every area of finance or business in general. And there aren't many academic organizations out there that put a higher focus or have a greater attention to detail on ethics than the CFA program does. Sometimes that can be a little bit restrictive just because it is one of the highest ethical standards out there, but for the most part, it's going to improve you as a market participant. To be more specific, some of the ethical standards like independence and objectivity, or loyalty to your employer, or due diligence standards when undergoing comparison of different investment options. At least for me, I recognize all of those things in multiple times throughout my career, really preventing me from being lazy in certain regards. It's not like you run into all these scenarios where you're going to make unethical decisions, at least hopefully not. But what can happen relatively often is client will be okay with a certain decision, and maybe you haven't disclosed every conflict of interest that could exist, or compared to every last investment option possible when you're doing due diligence. So sometimes it can be easier to just call it a day and close up shop without going the extra mile that the CFA program ethical standards really kind of require. So ethics is another area that is going to be very applicable to careers in wealth management. Before we end this, I'll loop back to one of the points I mentioned at the beginning of this video, which is that there's always going to be material in an academic program that you're just not going to utilize in your day-to-day responsibilities in your job in wealth management. I don't know why, but I like to pick on derivatives, and I always look back to the information I learned when studying for the level 1 and level 2 derivatives questions. I can't say I've ever used any of the information that I had to learn to pass the CFA exams in my actual career as a financial advisor. And not just derivatives, there's going to be some content from maybe most of the sections of the CFA program that is going to go unused for you if you're working in wealth management. And that's okay, because again, the content is so broad that there's not one career out there in the world that's going to utilize every single piece of information from the CFA curriculum, unless you're like a CFA tutor or Mark Meldrum. If you're enjoying the CFA content, please don't forget to like this video and subscribe to the channel. Thanks for sticking around to the end of this one. The YouTube algorithm loves the long watch times in terms of total minutes watched or just a percentage of this video. So as always, thanks for watching.